Hello, today we are solving Jan 2022 paper question number 1 part B. Prepare the forecast statement of profit or loss and other comprehensive income for the year ended 30th September 2022. So regarding this there is some information given. Let's see that. For the following year, commencing 1st October 2021, Fred's Bakery was considering providing a home delivery service in addition to the shop sales. So Fred Bakery was doing shop sales, for which we had calculated profit and loss and other comprehensive income and financial statement. Now they are planning for doing a home delivery service. So they made the following projections or the forecast. Okay, the home delivery, it is going to provide a revenue of 5,000 per month, and the shop revenue will reduce by 10% because some customers would choose to have home deliveries. So let's calculate here. So my shop revenue is going to decrease by 10%. The shop revenue, as we had seen earlier, it was around 150,000. Okay, this was the shop revenue. So now let's calculate this shop revenue getting decreased. Okay, so it's getting decreased by 150,000. Okay, 150,000 minus 10 percentage of 150,000. So that is going to be equal to 135,000. So 135,000. Now home deliveries, he's saying 5,000 per month, which means in the entire year it is going to be equal to 5,000 times 12. So it is going to be equal to 6,000. Okay. Then you have so these are the revenue. Okay, revenue and cost of sales. Okay, so the gross profit as a percentage of revenue of all the sales would be 40%. So we know the gross profit. Okay, 40% of the revenue is saying. So let's add up these two. 135 plus 6,000, it is going to be equal to 141. Okay, so 135 plus 6, that is equal to 141,000, and for that 40% it is going to be equal to 135. Okay, plus 5,000, sorry, this will be 60,000. So this is 60,000. So 135,000 plus 60,000, so 195,000, and on that 40%, okay, is going to be equal to 78,000. So the gross profit is going to be equal to 195,000, which is the revenue. Okay, this is the total revenue. We can write it here. Okay, so it is 195,000, and this one gross profit would be around 78,000. Now the cost of sales you will have to find out. So it is nothing but revenue minus this gross profit. So that value is going to be equal to, okay, its value is going to be equal to 195 minus 78. It is 117,000. Okay, so 117,000. So and then they have given the other costs. So there are other costs which are included here. So we can see that there are fixed cost 28,000. So let's include the cost 28,000 plus the variable cost. It says 10 pence for every 1 pound of shop revenue. So 0.1, okay, 0.1 pound times of revenue is around, we saw that the revenue is around 135,000 shop revenue. Okay, so it is around 135,000. Okay, the shop revenue was 135,000. So that is equal to 13,500. So the variable cost is going to be 13,500. And then we have the other cost. First one is one delivery vehicle at a purchase cost of 18,000, and the delivery vehicle would last for 4 years. The residual value is 6,600. So the depreciation cost is going to be equal to, okay, you can calculate. So it is equal to 18,000 minus 6,600 divided by 4. Okay, because it's going to last for 4 years. Okay, that's the thing they have given. So that is equal to, okay, 18,000 minus 6,600 divided by 4. Okay, and it is equal depreciation each year. So that value is going to be equal to 2850. So it is equal to 2850. Then you have vehicle running cost. Okay, the vehicle running cost is 600 per month. So 600 times 12. So it is going to be equal to 600 times 12. That is equal to 7,200. So 7,200. Then you have wages. Then wages are 90 and 50. Okay, 90 pounds, and the number of hours worked is 50. So 90 times 50, that is equal to 4,500. So it is 4,500. Now let's add up all the two costs. So the total cost is going to be equal to 56,050. Okay, now this is the total cost. Now we have to calculate the forecast profit. So we have to subtract it from the gross profit. The gross profit is 78,000 minus 56,050. It is going to be equal to 21. Okay, 21,950. Okay, so this is the forecast profit.